H2Ocean is a listed venture company, the first listed venture company in the Australian market. Now, it's similar in construct to a listed investment company, but we see some really important differences, and they're really premised around providing investors, all the way down to retail investors, with a method and a means to invest in venture capital and fintech venture capital. They are asset classes which have not traditionally been available. So we really think about the opportunity here to broaden out access to an asset class and broaden out access to an alternatives, uncorrelated form of investing, which just hasn't been available before. So H2Ocean will invest in a global diversified portfolio of early stage fintech ventures. We'll invest in between 15 and 50 ventures, so quite a large portfolio, because we really believe that diversification is important in early stage investing. And it will also allow us to invest across the different sectors of venture capital, that's payments, lending, wealth and insurance, but also across different geographies. We see a lot of really interesting opportunities coming out of Sydney and out of Australia, but equally out of markets like Shanghai and China more broadly, the United States and Europe as well. So the idea in creating H2Ocean is to give investors access to that sort of portfolio. The manager of H2Ocean is H2 Ventures, which is the firm that my brother and I established 3 years ago. Now, that business has been investing in early stage ventures on its balance sheet for the past several years. We've invested in 16 ventures and we've delivered 46% as a compounding annual rate of return. That is the sort of performance that we would like to be able to deliver through this asset class, and we'd like to be able to deliver for H2Ocean investors. So H2Ocean is a listed venture company, but as is the case with a listed venture company, in holding a diversified portfolio, is these early stage ventures won't necessarily all go on to be huge businesses. One of the key benefits in a portfolio like this is you have professional management that's looking to make sure that the ventures that are less successful, that we're maximising the outcome on those investments. We don't just let businesses go to zero, we seek to maximise the outcome. But it is important for investors to understand that you're investing in early stage unlisted businesses. So we've designed H2Ocean to provide an uncorrelated alternative investment within a portfolio. It's interesting, the great advantage of our fintech portfolio is that most, if not all, Australian investors have got a significant exposure to financial services. Banks represent such a significant percentage of our exchange. And so for all of those investors, we see H2Ocean as providing a really beneficial hedge within a portfolio. So that ability to provide what might just be the growth upside for the next decade in the way that banks have had their own growth for the past decade or two.